Let the mudslinging begin. Here's your ultimate 2024 election year playbook. Hey, I'm Luke Downey going over our latest macro insights at Map Signals. And if you are curious about what to expect for the market this year as an election year, we've got you covered with some awesome charts that you have never seen before. Let's go ahead and talk about this playbook. So let's rewind the tape, go all the way back to 1928 through 2023. We know that when you're elected president, you serve for 4 years, okay? Year one, on average, tends to be an S&P 500 gain of 8.1%. Year two is where things get a little bumpy with basically flat returns. Year three, that is your pre-election year, which has huge outperforming performance on average, 18%. And then you have election years like 2024, where the average gain is market beating. It's 10.7%. So if you're surprised by this big rally that we're having, it actually falls in line with history. Now, here's what's really interesting about 2024. So if we go back and we look at all of the second half average returns during election years from 1979 through 2023, the S&P is up roughly about 4%. However, if you're having a big first half in an election year, and that means 7% or more, check out what happens in the second half. The second half tends to see over 100% outperformance versus the average. So an 8.65% S&P 500 return. So that tells you that this rally, this momentum, it really only gets better, and it keeps going into the back half of the year. Okay, so listen, we know that you want to stay bullish, and maybe you're saying, oh, but I'm worried if the Democrats win or the Republicans win. Well, here's the deal. If you go all the way back to 1933, here are the full year returns of each president. And you can see Clinton was up 15.9%, pretty good. Trump up 14.6%. You've got H.W. Bush, 12.9%, Obama, 12.4%, and even Biden was up 10.6%, so it doesn't include 2024. But basically what this is telling you, in recent history, no matter if you're Republican or Democrat, you tend to get pretty strong gains. So I wouldn't be worried about what the outcome is. Just know that on average, you're going to do pretty well with Republicans or Democrats. But let's go ahead and take this a step further, because there's actually a really nice scenario that you want to be looking for really huge, big market gains. So forget about the parties. You want to be focusing on a split Congress. So we know gridlock is very important. Basically, that means that a lot of things cannot get done because you've got one side of the aisle is Republican, the other side is going to be Democrat. That tells you that stuff isn't going to get done. That means it takes out a lot of uncertainty in the market, and stocks love that. So here we can see the two outlier big performance is when you get a Democratic president with split Congress. The average gain for the S&P is 13.6%. And then the same thing, roughly the same, Republican president with a split Congress, you get market beating gains of 13.7%. Okay, now if you get a Republican sweep, you still get really nice gains of 12.9%. Democratic sweep, 9%. Now, I think the biggest key here is you really want to split Congress. That is what matters. That's when nothing's going to get done. And that's what markets really, really enjoy. So what does this mean for your portfolio? Number one, resist the urge to sell stocks because of the election, okay? History proves that it doesn't matter who's in office. Stocks tend to do well regardless, okay? So that's step one. Then number two, here's more of your tactical move. Buy into pre-election selling. And you're like, what are we talking about? Well, check this out. If you go all the way back to 1928, this is through June of 2024, we've got all of the average market returns by month. You can see that in September and October, there tends to be a lull for markets. Okay, you see a lot of people, they get to the sidelines, they're worried about the vote, and then after the vote, you start to see this huge surge of money going into markets. with November average gains of 1.2% and December average gains of 1.5%. So this tells you right here, that's your opportunity. If we get a pullback in September, in October, a lot of people aren't thinking it's possible. History says it's coming. You're going to want to be buying amazing companies during this pullback, because once that money flow starts going back into stocks, you are going to be participating very nicely. So that is the bottom line. Don't focus so much about who's going to win. Chances are it's not going to matter. Then number two, keep staying long, because the second half is going to likely have a market beating performance based on the strong performance we've had in the first half. And if you have been missing out on a lot of the rally, focus on when we get a sell-off. Chances are it'll come in September or October as people get worried about the vote, and then you can ride that rip as we get into the late area of the market. You guys have a great one. I will talk to you soon.